It's Domino's Pizza, which primarily operates as a franchisor, with approximately 99% of its global stores owned and operated by independent franchisees. The company generates revenues and earnings through charging royalties and fees to franchisees, selling food, equipment, and supplies to franchisees, and operating a number of company-owned stores in the US and Canada. The pizza category within the quick service restaurant (QSR) market is described by the company as being large and fragmented. The category is mainly comprised of delivery, dine-in, and carry-out, with carry-out and delivery being the two largest segments. Domino's Pizza competes in both the delivery and carry-out segments. It's among the 4 industry leaders that account for about 60% of US pizza delivery spending and approximately 52% of the carry-out segment. Domino's Pizza competes against regional and independent or local companies, as well as national chains like Pizza Hut and Papa John's in the US, while internationally they primarily compete with Pizza Hut, Papa John's, and country-specific national, regional, and local pizzerias. In regards to the types of products Domino's Pizza offers on its menu, the core part of their menu has different sizes and crust types. They also provide side items such as bread products, wings, boneless chicken, pastas, oven-baked sandwiches, dips, soft drink products, and desserts. In the past, they've also tried other items like mac and cheese, and Domino's loaded tots, and pepperoni stuffed cheesy bread in the US. While international markets offer culturally specific variations on their menu, Domino's operates and reports its performance in 3 main business segments: US stores, international franchise, and supply chain. The US stores segment includes both company-owned and franchise stores within the United States, while the international franchise segment comprises franchises outside of the US. Then, the supply chain segment deals with the production and distribution of Domino's products to their stores worldwide. To become a master franchisee for Domino's Pizza internationally, one needs to possess local market knowledge and expertise in local laws, customs, culture, and consumer behavior. Access to sufficient capital to meet growth and development plans is also required. Additionally, prospective candidates must have the ability to identify and access targeted real estate sites. These qualifications allow them to establish and develop Domino's stores effectively within a specific geographic area while adhering to the agreed-upon terms and fees. The supply chain segment has made up a large portion of revenue. Even back in 2023, it accounted for $2.72 billion, or 61% of the company's consolidated revenues. This segment includes regional dough manufacturing and supply chain centers that provide fresh dough, food, supplies, and equipment to most of their U.S. stores and over 7,400 stores in total. The supply chain also offers profit-sharing arrangements to franchisees who purchase all their food from these centers. As for competitors, there are the usual national chains like Pizza Hut, Papa John's, and Little Caesars Pizza, along with regional and independent companies. Indirect competition can also come from supermarkets, meal kit providers, and other food delivery services which can affect their market share, customer base, and employee pool. External factors such as consumer tastes, economic conditions, marketing efforts, labor shortages, and supply chain availability also contribute to the competitive landscape. In general, Domino's and companies in the QSR market encounter challenges in the form of increasing labor costs due to minimum wage hikes in various jurisdictions, regulatory compliance costs, and potential unionization efforts. On top of that, rising food ingredient prices, particularly cheese, can affect the bottom line as these costs represent a significant portion of sales at their stores. Similarly, certain ingredients are only available from limited vendors, making it difficult to negotiate competitive pricing or find new suppliers when needed. Furthermore, menu price increases to offset rising operating costs may decrease consumer demand and negatively impact sales and profitability. Overall, supply chain disruptions or shortages in fresh food products and store equipment remain a constant concern. They rely on frequent deliveries from single or limited suppliers for certain ingredients, and any issues with these supplies could affect availability, quality, and cost. Past experiences of supply chain disruptions have had an impact on the business. Moreover, Domino's doesn't have long-term contracts with some of its suppliers, which may result in those suppliers increasing prices or failing to deliver products. So while Domino's has had an established position in the QSR pizza market, it constantly needs to stay ahead of any supply chain issues that may arise to maintain its spot among the leading pizza providers. For more on Domino's Pizza and other companies, follow Ascencore. Thanks for watching and have a nice day.